Good morning, everyone, and welcome to the European crossover webinar. And sorry, I was just looking at some headlines. Didn't even realize that we just ticked off at the top of the hour. We are seeing the dollar index continue to push higher here at 99.26 right here, and obviously the euro correspondingly weaker here. And I was just looking at a couple things here. I was looking at gold. It is moved higher. We were last week we talked about a close above a 2-hour close. Actually, I'm going to switch into that right now. So we had talked about a 2-hour close above 50.80 right here. Here was that close. I said if we can go and get the close, and that would open the door for 1591. And we've gone and made it up to the 1591. We actually went to 1590.5 in Asia, and then we dipped back a little bit. We've pushed higher. But the thing is we're pushing even higher. So this is just, think of it as really a mile marker to, in all likelihood, much higher price. We did get some concerns yesterday, which was with Apple, for some expected revenue shortfalls in light of the coronavirus. Also, I don't know if you saw that HSBC was also getting had some news on that was rather negative. At the same token, we're also seeing crude oil take a bit of a dip in here. Let's move there. And you can see here, we're dipping right here. We're actually coming into some key support in here, right around this 51.50. Now we are seeing this really start to come off now. We're seeing some selling come in here. You can see here. But this is a key area, and I think this comes in right around the 50% to start with. Hang on. But it has not been able to pick itself up. Bear with me. Yeah, right here at the 50%. So it'll be an interesting area right here. But we have not been able to go in and pick itself up. Yesterday, we actually, although it was in very, very light trading, we did push higher here into the close. But then once again, that Apple news came out, and it's just been on a sell mode, kind of holding. It'll just keep dipping, hold a little bit, then dip further, dip further. It feels like, and my analysis from yesterday was this was going to be an area that if we do break this, it basically breaks the back, of it. And actually, I guess I can see why, which I wasn't looking at that time as a percentage point. But here at the 50, this would actually be 50% retracement of this area right now. I don't think it's that much. It's pretty surprising. I can't believe that's 50%. Hold on. More like 38. Hold on. Yeah, 38. Right there would be 38%. But it's going to be problematic to go on and lose that. Bear with me. Move this. So we'll see. But right now, like I said, we had just gotten up here. It looked like they're going to try and make a push potentially higher. And that Apple news really put it under pressure. We've seen the S&Ps. S&Ps are dipping right now. They're at 33.64.5. Let's go and take a look here. Right here. So it's leading to that pressure here, and also even with the gold market, it's kind of ticking up and down a little bit. Looks like it could take a pause, but the thing is we're just now starting to break out here with the gold. So that would be just momentarily maybe before potentially for higher prices here in gold. So you're seeing here some pressure here with the crude oil. You can see as we dipped here. Take a look at this. Right from the get-go. You see that right when we opened up, and we had a little area here, and I thought we might be able to make it up to about 55.32, but we just kind of ran out of gas, and from there you can see it's just been a little bit of a, what do you call it, not a rally at all, but just a little bit of relief, and then we dip back, a little bit of relief, and then we just kind of roll over, and then some pretty key level here at 51.67, but you can see we've continued to go and impress even lower. As you can see here now, with looking at the cumulative volume, delta still pushing even lower here. This is an area where you think, well, they may be able to find a little bit of support in here, but certainly that remains under pressure, and certainly with the SPOOs under pressure, it leads credence. But problem is, like I said, we had just looked like we had the potential maybe to move a little bit higher yesterday as they try to close up a little bit higher. And so anyone who's long, they're putting their feet to the fire right now. We may take a little bit of a pause in this area, but it's this is very key area here, right here at this 5150. You can see that right here. We break below that, and really opens the door for us to continue to push even lower. Looking at here on the 30-minute moving average here. This. And you can see it, look, everything looked good for us to move higher, you see here, but we've really rolled over and it's just the pressure remains. Look at that. It's just, at this point, it's been unrelenting. Maybe a little bit of support here. And that was at the 50. Probably right down here to the 43 here. Try to clean this up a bit. See if maybe they can kind of make a stand here around the 43, but we shall see. But we're getting really press these lows, and the pressure's been, you know, unrelenting to say the least. Let's go move back into FX though. Looking at data coming in, we are seeing them kind of trying to hold their own a little bit here in the crude oil. Probably a little bit of short covering coming in here. Volume isn't that great down here. Anyway, that being said, we do have ZOO at the top of this next hour. Reuters poll is for 21.5. Last month was 26. I mean, German economy just really had some tough times. And then we do have UK unemployment data coming at the bottom of the hour. Okay. Yesterday we saw practically no movement whatsoever. So the analysis is pretty much the same, but we'll go over that. Before we do that, we'll go on and cover a little bit of news. So the Australian-New Zealand dollar swoon as economic costs of epidemic mount. The Australian-New Zealand dollars were jolted lower on Tuesday as a production warning from Apple highlighted the mounting economic costs of the coronavirus and spooked investors across Asia. And really that has set the tone. You know, as we've seen equity indexes weaker and continue to push weaker. And then, what you want to call it, remnant damage, that being, you know, the crude oil has weakened along with the equities, and then correspondingly we've seen gold add on to, which was had already been a close above that 1580 that we referred to. The Aussie weakened at 66.87 towards its recent decade trough at 66.57. Failure on Monday to clear resistance around 67.33 was also likely encouraged technical sellings of the currency. The lapse came as Apple said it was unlikely to meet a sales target just set 3 weeks ago amid lost production and weakening demand in China from the outbreak. The blow to risk appetite saw stocks across the region slip, while safe haven bonds and the Japanese yen got a lift. Not lifting sentiment were minutes of the RBA, which showed the board already considered the virus a material threat to the economies of China and Australia. The central bank chose to keep rates at 3/4 and hoped that the impact would be transitory, though analysts were not so confident. The minutes are 2 weeks old with further escalation of the virus and impact, including greater disruption to supply chains, delayed from the term starts for the Chinese students, and extension of the ban on arrivals from mainland China. The analysts noted the data for January and February would not be released until March and April, and it could be mid-year before the actual cost of the epidemic might be known. This suggests there are some risks that our base case for June rate cut slips into the second half with a more drawn-out path to a terminal cash rate of 0.25%. That is one reason why the futures imply only 18 probability of point cut by April, rising to 52% by June. Much will depend on the labor market fares, given the RBA said a marked increase in unemployment could still shift the balance of risk towards further easing. Job figures for January are due on Thursday, and economists are tipping a tick up in the unemployment rate to 5.2 from 5.1%. Anything higher would likely reignite talks of an early rate cut and slug the Aussie hard. And the euro on the back foot before zoo data. Rate cut talks hurt the Aussie. The euro was pinned near a 3-year low versus the dollar ahead of a highly watched German survey on Tuesday, which is expected to show a sharp slump in investor confidence and fuel growing pessimism about the outlook for Europe's largest economy. Financial markets clung to tight ranges following a U.S. public holiday on Monday, shifting investor focus to European news and developments in the coronavirus crisis. Among Asian currencies, the Aussie slipped below 67 cents. We've already gone over that. Sentiment for the euro worsened dramatically this month after weak manufacturing gross domestic product data from Germany suggested the Eurozone is more vulnerable to external shocks than previously thought. The euro is close to testing an important support level at 108 due to the divergent economic outlook between the Eurozone and the United States, said Junichi Ishikawa. It looks a little oversold, so in the very short term there could be a bounce, but the euro's fundamentals still point more to the downside. Still, since the start of February, the single currency has lost 2.4% versus the greenback as a disappointing economic data raised concerns that the Eurozone monetary policy will have to remain accommodative for much longer. And we are seeing the now crude oil take even a further dip, as I mentioned here, in this 51.42 area, which I think is probably a good little area. Trying to see if I can pick some up here if we dip a little bit lower. Let's see, the pound was steady at 29.98 in Asia on Tuesday, following a 0.3% decline the previous session. Prime Minister Boris Johnson advisor David Frost said on Monday Britain would not be threatening to follow EU rules to win a free trade agreement with the bloc. Britain left the EU last month, and the two sides will now start negotiating a new relationship from trade to security. China's Hubei province, considered the epicenter of the coronavirus outbreak, said new cases of the illness fell slightly to 1,087 on Monday from the 1932 the previous day. Currency traders also cautiously monitoring new data on the virus, given uncertainty about the actual number of cases and difficulties in estimating when the epidemic will peak. So with that, let's go and move into the analysis. Like I said, there was really no changes whatsoever because we just simply did not move at all on Monday. It was just about as dead a day as you can possibly see. We'll go on and recap once again on the euro, but really no changes. One moment. So looking at the euro, let's see here. Looking at the euro, we're looking at for today's analysis, which really is the same as of yesterday's, is the bottom. We're looking at this lower end at 803, and we'll move into, push this further out so we can get a better look. Right here, and I'm not sure what happened to our 803. We did have it here, so, but that's going to be our bias chart support, which is going to be 803. There is additional support below at 776, but we're looking at 803 for that, and with additional support at 776. They could take out this 803, like I said, on those zoo numbers. We shall go on and see. And on the upside, 861, and we're not even going to go with 89, just go with 861. I just took a few pennies out of the crude right now. I'm not going to stick around because I'm doing the analysis. I do like it to bottom out around here, but let's just go and move into the cable. And really, as I mentioned, the analysis doesn't change from yesterday. There we go. So what I was saying was the bills are simply unwilling to be taken for another failed ride. So the resistance comes in at 30.84. Well, we've already looked at that. We've already paired back. That's what I'm saying is one of the things we looked at and we talked about yesterday was that we were rather oversold to start the beginning of last week. And you can see here that we did make it down to that area that I had looked at, which was 28.98. And let me put on my headlines here. So we made down to the 28.98. So we're rather oversold. And look, we were just barely even moving higher. Considering how far we'd fallen, you would have expected more. So we've already started pairing back, and this was our bias chart from support from yesterday, which is 29.80. That's going to stay the same. The only difference is we will actually lower our whatchamacall, our upside, the resistance, which is going to be right here at 30.40, called 30.49, 30.49. But you can see here, even that's what I was referring to, is that the upside would be a little bit more difficult because all we're seeing is just a little bit of short covering, not any, what I'm referring to is going to be significant short covering, relatively speaking. You can see here, the market was at 32 and we fell all the way down to 29. So, I mean, some real short covering is going to take us up to close to, like, let me say, the upper 30s. Like I had mentioned, the 30.85, 31. We're already sliding back. And like this, bulls are not willing to go and step in. I mean, it's just like someone might buy down here for a few pips, but they're not going to get, I don't believe they don't want to get fooled again as they have been. So here we are quickly sliding right back again. Let's go on and move into the Aussie dollar. And like I said, there's been really no changes here. We did get the RBA minutes meeting, and they mentioned about the risks with the impacts from the coronavirus to China and Australia. So we've seen this weekend here, but resistance, or I should not resistance, but I should say support, is going to remain the same, which is going to be right there, 66.53. No changes for right now. Now we do have employment data coming up in the next day and a half, and that'll certainly go on and impact it. But at least for today, it's still going to remain the same, 66.53. as I mentioned yesterday, we really saw no real changes in here. 66.53, and on the upside, 67.62, and even that almost feels like that would be a stretch at this point. Let's say, let's go with that, 67.38. With that, let's go move into the Kiwi. Okay, and moved into the Kiwi. We're still, I got to turn down this volume. These headlines, getting the squawk in my ear is driving me nuts. But we got support here, and that's still going to remain the same. This critical support here at 63.83. And resistance, once again, as I mentioned, no real changes. Well, we actually had 64.93, which is that breakout level that we had mentioned before. Well, that's key, but I'm saying I mentioned yesterday is once again being the resistance. But at this point, considering where we are today, that would be rather ambitious. So resistance, if you're playing for the short side and you're looking where the risk is going to be right there at 66. 64, 64, 64, 64. So it's going to be pared down a bit. Let's go move into the dollar CAD. Like I said yesterday, we had our webinar was like an hour long. Today is obviously going to be much shorter because there really was no changes yesterday. We were pretty much just dead in the water. Seeing a little bit of movement today, but once again, not a whole lot. Same thing here with the Canadian dollar. We did see potentially a risk down at 32.07. Kind of held our own yesterday. Resistance on the upside for the dollar CAD was 32.69. We're not very far away from that right now. We're actually, see right here, actually that level comes in, well, there's the 32.69, but you can see this level is right here at 32.69. So I wonder if we might be able to give it just a little bit more to goose some stops. You can see right here. We're going to give it that little bit extra room in case you want to goose those stops here. So we're going to say 32.81 for today. It's a little bit of an update. And on the downside, let's take a look here. Potentially we may be down here at 32.07, but once again, considering where we are today, let's take a little bit closer look and see if we can't. Right there. 32.19. Okay, let's go move into the dollar peso. And yesterday we were talking about support here at 851, 1851, I should say. Well, with the weakness in equities, we certainly moved off of these lows. Now, we did make it down there. We made it, looks like about those, well, pretty close. That did hold. 1852 is the low, so we have 1851. We've moved higher, but really not as high as I thought we would have. I thought we'd seen a little bit better short covering. So we had resistance at 1865. You can see that here. I think we want to give it a little bit more room concerning the weakness in equities. So it's actually going to be 1868. And like I said, it almost seems as if we're flying through here. But like I said, yesterday we had no movement whatsoever in these pairs. So just a rehash of what we already had yesterday. But we saw a change here with the dollar yen, although to look at it, you wouldn't think it was much of a change. But we did go on and pair back here. I guess probably better look would be looking at it on a 2-hour chart. And even then almost feels slight. Now we've had our bias chart support at 964, and I believe the low was 965. Yeah, 965. We had 964. Looking at it, how far if we can dip even further back, the key level for us is going to be 939. If we get below that, then it really opens doors. That's what really gets exciting, or something really trips things. It's 939, but 964 is pretty good. We're only off by a pip. And on the upside, we do have UK data coming out. On the upside, we're going to be looking at 987. 987. Now, jumping through this real quickly because we do have UK data coming out. So let's go and get to that. We were already showing that at the beginning of the top of the show. So here's the pound. Here's also the sterling versus the odd. And then the guppy. So we wanted to show all three at the same time. And then we go with the claimant count. Now, as I mentioned here, we're still keeping this at the same here, which is on the cable, 30.49 for resistance. As I mentioned, most of the data, most of the prices didn't change very much. So if we look at yesterday's data, looking at the guppy, we had 43.48. Let's see where we are right now. We might be, okay, yeah, you see, we had already taken a dip. So we're looking way up here at 43.48. We're much lower, at least for now. For right now, I'd be looking at keeping on this 43.02, which isn't that far away, 43.02. Well, that'd be another 40 pips. And then on the sterling odd, well, that's been taken off, moving much higher. Sterling odd, 94.22. Well, we're already well above that. So let's go on and move this out of the way. Data is in another 25 seconds. Claimant count, probably was 14.9 thousand, unemployment rate 3.8. Here's the cable right here, sterling odd, and the guppy. Guppy will be looking at around this 43.02. 4 more seconds. See how it comes out. There we go. 5.5. Revision of 2.6 thousand, unemployment rate 3.8. we're not even seeing much of a response. Bit surprised here. Employment change, 18,000 up 18,000. 180,000. Surprise was of 35,000. The prior was 208. But not much of a reaction whatsoever. Look at that. Not much of a reaction. Look at it. Look at the pound. I mean, a bit of a disappointment here. I thought we'd see something, even if it was to the upside or to the downside. Well, let's go and get back to the analysis. So yesterday we had 964 as our bias chart support. The Asian low was 965. The key level for me is going to be 939 as a trigger for them to get some reaction. If we break below that, really opens the door for us to move lower. The big pivot is 927, but we've been holding up so well up in here. To me, it's going to be 939 for a trigger to kind of force this thing and open the door for us to move potentially lower on that. Let's go move into the cash dollar index. Well, this thing has been up and away, and one of the things we had mentioned since yesterday was the prior week. Remember, we had talked about if we can get a daily close above 98.42, it would open the door for 99.70, and it's a little bit higher than this, even this close right here, but 99.70. Well, we're still on our way, folks. I mean, I thought we would get a pause around 98.90 to 99, and then we pair back. We'd come back, we would defend 98.42, and then move higher. But we're still, blowing and going. So it's 99.44 is our bias chart resistance since yesterday, and it still remains the same, 99.44, with bias chart support at 98.71. No changes there. As I mentioned, we had no movement yesterday, so everything's going to be stay relatively the same. We did see Kiwi Yen dip further back, and it's challenging down here. This is going to be the key level. We talked about this previously before, this 69.74, but where they were at, we said, hey, look, this is a trigger, which is 70.08. And that's still going to remain the bias chart support for right now. There is some good support down here. Really, it's a band between 69.50 to 69.74. 69.93 is a 50%, but this is still going to remain in effect. 70.08 on the downside, okay? And on the upside, 71.16. That might be a bit ambitious here. So we're going to go right there with that open, which is going to be 7.79 right there. 70.79 for the resistance for today. And with that, let's go and move into the Euro Yen. Well, this is still remaining rather sickly, and we do have German numbers out at the top of the hour. That may open the door for us to take a quick dip down here. And that quick dip could potentially get us down to 1847, which is what we already had as our bias chart support. That's going to be confluencing with 1855, which is the 61% of this entire move back. There, we see right there, 61% back. So it's going to be 1847 and 1925 on the upside. No changes. Let's quickly go and move into the euro odd. We are picking ourselves up in the euro odd because the Aussie has been so weak here. So bias chart support yesterday, once again, we hadn't moved a whole lot. Came in at 61 even. You can see right here, 61. And on the upside, we had 61.82. We've since moved beyond that because, once again, because of the weakness that we're seeing here in the odd. So resistance, you can see right here. These lines coming across right there. Going to keep it simple. And that's going to come in right there at 62.55. Now let's go move into the Euro Kiwi. Well, once again, this is a beneficiary of the Kiwi as well as the Aussie being weaker. And the resistance, you can see it clears the bell, is going to be right there, 69.27. And we do have the potential to slide back because we do have German Zoom numbers which are expected to come in lower. So once again, on the downside, it's going to be critical is right here, 68.04. I don't think we're going to turn around and fall all the way back there. We can probably move that a little bit higher at 68.30. But where's the trigger? It's going to be 68.04. So that's going to remain the same on the downside. And the Aussie Yen, we start to slide right back again. And you can see the level of interest right here is going to be the 72.95. And certainly an option to get there considering the weakness of the Aussie. The upside, which we even gave them the benefit of the doubt, we thought they might be able to trigger it above here and come up to 74.17. Certainly does not look to be the case. And at this point, we're going to move it right there with the open, right there. You see there? Which is going to be 73.84. Okay, moving on to the guppy. Well, we saw really no movement whatsoever. I mean, I thought we would have seen something off of that employment data. Really had nothing. So once again, we had no changes because yesterday we didn't move at all. So looking at this, we had 43.48, and on the downside 42.85. Low so far has been 42.34. So we will adjust that on the downside, considering it's starting to come back. But where are we seeing the most touches? Comes in right across there, which is going to be 42.18. And on the upside, 43.23. And lastly, we'll finish up with the sterling odd. Certainly, we've seen some strength here because of the weakness in the Aussie dollar, and that's going to take us right here to 90.43. We actually weren't even that far away from it. That will be our resistance, 94.83. Certainly, like I said, we talked about this as we broke out of this triangle and the potential for this to move higher. And we weren't looking for this to even slip very back very much because, once again, we talked about this. Anyone that got stopped out, they're not going to try and say, okay, now I want to reshort again at this level. So the door was open for us to move much higher. Support now would come in just below these lows here, and we'll go right there, which is going to be 93.06. Euro still remains weak. 803 is going to be the bias chart support here. We do have at the bottom of the hour, we do have German zoo numbers. I mean, bottom of the hour, I mean, top of this next hour, top of the hour, German zoo numbers. They're looking for 21.5 on sentiment and negative 10.3 in current conditions. Moving back here, we'll just go and wrap up with the gold and the crude oil. So we are starting to see this kind of trying to bottom a little bit. We talked about this, and I had actually come in at 51.42. But I don't like to hold when I'm doing the analysis, because I like to use the cumulative volume delta here, and it does look like you can see here that we're diverging. You see that here, but if you consider how oversold this market is, you would have probably expected even a better balance. You see what I'm saying? I haven't thought really realistically. I thought here, you see it 51.51. I thought that probably would have been as good as it would have got. And we still dropped down there at 42. Decent amount here of volume, if you look on here. But we are moving a bit higher. But the problem is, look how weak the equities are. So that's the concern here, is that we could even slide even further, or we'd be seeing a much bigger bounce. And that was my thoughts too, is when I got into that thing, I'm like, well, I'm trying to do the analysis. I'm trying to keep one eye on the crude and one eye on the SPOOs. And if we do take it, if we were to fall below this 51.42, we'd unleash some, additional strong selling, take us down to about, you can see right here, right around 51.18. So why I didn't stick around very long on that, even though, like I said, we were rather oversold. We've come off that a bit, but considering how oversold we are, boy, that doesn't look good at all. We should have already bounced back up easily into the 60s, the mid 60s here. She's got the point of control. VWAP is going to be here at 51.80, 51.83. Taking a look here at the gold market. We're still trying to push higher here. And we had talked about last week, if we got 2-hour close above 1580, that would open the door for us to get to 1591. Well, that's where we are now. We've seen the market kind of ease back here. Just, I mean, not ease back, but just, you know, the ebb and flow. But once again, you've got this market, you know, making good progress in light of this gap move here on the indices. And that's, you know, compliments of the Apple news. So once again, like I said, there's more to go, or certainly you would seem that way, more to go up here on the gold market to trigger us above 1600. So you can see these little pauses, but they're quickly being bought up rather quickly. I mean, so VWAP, you can see right now, is going to be here just 1589.50. So yeah, we can dip back a little bit, but the underlying tone here is good underlying bid tone in light of where we are with equities. That's all we have for today. Thanks for joining us here on the European Crossover webinar. And as a reminder, I did go and post that on Twitter as I was noting the European Crossover webinar, is that if you are a subscriber and you use MetaTrader 4 or MetaTrader 5, you do have the ability to go in and beta test the patterns in play, and you don't have to use it on a live account. Once you go and use it on a demo account, if you have it, you can use it with your demo account in light of, you know, in conjunction. You know, like I said, you have your live account, but you can use your demo account to go in and test it. And if you use a MetaTrader 4 or 5, you can go in and beta test with our patterns in play. Just simply go in and send an email to support at ForexAnalytix, and let them know, and then they'll be able to get you set up with a beta test for your MetaTrader 4 for the automated trading for the patterns in play. Once again, thanks for joining us here, and have a good day trading.